Hi everyone, welcome to the Real Estate Tax Tips channel. My name is Cherry Chen, a chartered professional accountant located in Oakville, Ontario, Canada, and I'm on a mission to become the Google Map for hardworking Canadians seeking financial freedom. And one of the ways to essentially get to financial freedom is to start your business. And having your own business is an amazing journey. And when you first start out, it may not feel like it, but here are the 7 tips that I have for you guys so then you can start your own business on a better foot than I did when I first started a number of years ago. Now, when you first start your business, it is difficult to see when you're going to make money. A recent entrepreneur that I spoke to had just started reporting net income for the first time in 7 years. After they started operations 7 years ago, it's the first quarter that they've ever recorded net income. It's crazy amount of dedication. I have so much admiration to this particular person, and I just feel the pain that he had to suffer through. And as you can see, it isn't easy to start out a business, and as an entrepreneur myself, I've been on this roller coaster ride for like over 10 years. It has not been an easy journey, especially when I first started out. And at that time, I was in my late 20s and realized that I wasn't getting the job satisfaction that other people are getting, so I was getting bored. Now, instead of appreciating how cushy my job was, back then, I had no appreciation back then. I decided to quit my job and become self-employed. So at that time, I was just shy of 6-figure salary and benefits altogether. So I was just getting paid under $100,000. Now, first year into my business, I spent $20,000 to purchase a small bookkeeping practice. And do not ask me why I do that, because I'm not meant to do bookkeeping. It's just that maybe I was hormonal, I was at home, I was trying to contribute. I started by buying a $20,000 worth of bookkeeping practice, and I reported a net income of $30,000 that particular year. I made just enough to pay for my full-time nanny's salary. That hasn't accounted for even the loan that I have to repay. So when my dad, who's also a fellow entrepreneur, he lives in Hong Kong, he has a contracting business, asked me, well, how much did you generate in your first year of business? And I was too embarrassed to tell him that I made a net income of $30,000, and that was not even enough to cover my kid's caretaker salary. It was very embarrassing because I could have just taken a cushy job earning close to $100,000, and if not $100,000. But instead, I choose to take the hard route and net $30,000. And I guess I really should not be complaining, considering that other people are not even reporting income until 7 years later. My business has improved over the last 10 years, and I've picked up a few tricks here and there to change my mindset as well as build my business. And if you're interested in learning how I bring my business from the ground up, comment below in the comment section below if you're interested, because I have a lot to share. If you ask me, I always have a lot to share. And I'm more than happy to share all that experience and my entrepreneurship too. But today, I just want to focus on talking about the top 7 tips from financial management as well as from tax perspective, what you need to pay attention to as a brand new entrepreneur, because I made some of these mistakes myself in the past, even as an accountant. I made all these mistakes, and so that's why I want to share with you so then you can skip these mistakes and go on to actually focus on making more money. Now, if you like our video on small business, make sure that you let us know in the comment below, give us a thumbs up and hit the subscribe button so then I can continue to produce these type of contents for you. This will also help tell the YouTube channel, YouTube God, that I'm producing something useful and relevant information, and they will turn around and share it with more people. So the first thing first, my first tip is to determine your tax structure. Well, depending on the type of business you have, you may be required to register for different type of taxes. As the saying goes, it isn't how much you make matters, it is how much you get to keep matters. I've done numerous videos explaining how personal tax system works in Canada, and Canadians are taxed on a progressive tax system, and the more you earn, the more tax that you have to pay. You can always refer to this particular video for detailed explanation. Now in Ontario, the highest marginal tax rate is 53.5% on personal tax. Income you earn over $236,000 is taxed at 53.5%. Yikes, CRA gets to keep more than you do if your net income is over $236,000. So on the flip side, a Canadian private corporation that qualifies for the small business deduction can earn income and pay as little as 12.2% for the first $500,000 net income inside a corporation. If you're making good income from day one, corporation can offer you a lot of tax planning opportunities. The decision to choose a particular structure also rests on the type of business that you operate and your risk tolerance. For example, if you are operating a restaurant or a construction company, a contracting business, you might be exposed to higher amounts of risk. What if people get sick from going to your restaurant? What if a random person walks into your construction zone and get hurt? So in Canada, unlike in the United States, you cannot choose to open an LLC, which allows you to have limited liability protection while reporting all your income in your personal name from your business. The only way you can protect yourself is to set up a corporation from legal liability protection perspective. In Canada, corporation is considered a separate legal entity. It can provide you with legal protection against your personally owned assets. I started out as a solopreneur, owned my business in my personal name. I have a small accounting business and not very many clients at the time. So chances of me being sued was relatively low. So at the time I started as a sole proprietorship. And as I gradually grow my business, the need to minimize my tax has increased. So I transferred my business to a corporation. I also set it up as a corporation to limit my downside risk. Now the decision to you to own your business in your personal name or in a corporation goes back to the specific situation you are in. There is no one-size-fits-all answer. Make sure you consult with a qualified accountant. And as always, our team is always happy to help you to have a discussion to guide you through the process. Now that we've decided on the type of ownership structure that you would have to operate your business, it's important to identify and understand your tax obligation. In Canada, if you run a small business, you can be subject to many different types of taxes and you have many different types of obligation. If you earn gross income over $30,000, you can be required by CRA to collect something called HST, Harmonized Sales Tax, on behalf of them in Ontario, depending on the type of business that you are in. Some of you may be completely exempted altogether. Now, if you sell primarily to overseas customer, you might not be even required to pay HST or charge HST altogether. If you sell baked goods, for example, there are some goods baked product that you might not be required to charge HST, while some others are required. So depending on your particular situation, it's best to understand it at the beginning, so then you won't be missing out on charging, and CRA could turn around and charge you a bunch on the stuff that you haven't charged. Now, in some provinces where HST is not applicable, only GST is applicable, certain services or products that you sell may also be required to by the provincial government to charge provincial tax. For example, in the province of BC, British Columbia, as contractors, you're required to also charge PST on your invoice on top of the GST component as required by CRA. So it can get quite complicated. So it's best to consult with someone, a qualified accountant, to understand your situation so that you start with the right foot. As a startup, generally speaking, your business would be an annual filer for HST purposes. Corporation has 3 months until after the year end to file their HST return. Sole proprietor, on the other hand, has until June 15 of the following year to file their HST return. But the confusing part is that the payment is actually due April 30th. And so you have to make the payment by April 30th to avoid any interest charge, but your return doesn't have to be submitted until June 15th. So the penalty for non-filing would only be imposed after June 15 if you don't file by June 15. But interest will start kicking in when you don't remit your balance by April 30th. You might start off being a solopreneur, but you might also be required to hire staff to help you out from day one. If you have a business that requires you to hire employees from day one, you're now required to withhold taxes, Canada pension plan, as well as employment insurance from your staff pay. You are then required by the government to you're then required by the government to remit the withholding amount together with the employer contribution to CRA as a lump sum every single month. Now, you are also required to file something called T4 summary of remuneration paid to CRA by February 28th of the following year to summarize the employee's income individually and reconcile it back to what you have submitted as source deduction on a monthly basis. It's important to note that even if you own your business in the form of a corporation, if you owe any source deduction to CRA, they still have the right to go after the director's personal asset. They could go after the director of the corporation and make them personally liable for any source deductions outstanding. So this is why it's always important to remit your source deduction, the withholding amount from your employee on their T4, and make sure that you send them on time, 15th of the following month, every single month. And lastly, depending on your business structure, the deadline to file your tax returns can be different as well. Now we're talking about income tax return. The deadline to file the income tax returns could be different. If you own your small business in your personal name, the deadline to file and report your business income on your personal income tax return, the personal income tax return, which will also include everything related to your business and expense, business income and expense, is due June 15 of the following year. So if you have a business in 2022, the deadline to file that return is June 15 of the following year. Income tax payable, again, similar to the HST payable, is due April 30th though. If you own your business in a corporation, however, you're required to select a year end for your corporation. You can choose the year end to be December 31st, same as the calendar year end, or you can choose a different year end to be your corporation's year end. The income tax return and payable is driven by your corporation's year end date. Generally speaking, income tax payable is due 3 months after corporation's year-end date. The tax return, however, is due 6 months after year-end for a small business corporation. Now, it gets confusing, isn't it? Now that we cover the 3 major types of tax liabilities, don't forget to follow the next step. Okay, the third thing that you need to pay attention, my third tip, is register your business number, payroll source deduction number, and sales tax number. Well, the moment that you decide to start a business and identify there is a need to register for your HST account, source deduction account, and corporation tax return, business numbers, you might want to start setting things up from the beginning. We've seen some of our clients firsthand completely forgot about registering for any payroll source deduction account and started paying their employees a net amount after withholding. And then by the end of the year, when they come to us and they tell us, hey, like I haven't registered for my payroll account, what are we going to do? What can we do? You would end up paying a large amount of penalty. At the end of the year, they told us that they hired some employees. We're now required to backdate the registration for them, and then they're now liable for a lot of penalty. We've also seen some of our clients not registering HST on time. Generally speaking, when you register for HST account, assuming your business is considered, the service or product that you provide is considered taxable supplies in the eyes of the Excise Tax Act, then you are also eligible to claim the HST that you pay to the vendor on the expenses to offset against the HST you collected. So what it means is that, yes, you have to charge HST on behalf of the CRA once you register for your HST account. But on the flip side of it, once you register for your HST account, you can also claim the HST that you pay on your expenses to offset against the HST that you have collected on behalf of CRA, and then remit only the net difference to CRA. As a result. So the registration date matters because HST is very diligent. HST department of the CRA, the whole CRA is very diligent. If they see the HST registration number, registration date, say April 30th, and the expenses were incurred prior to April 30th, say March 31st, they would not allow you to claim the input tax credit, the HST that you pay on an invoice that you get on March 31st, because it's not after April 30th. You want to maximize the benefit of the registration because you have to register anyway. You want to be able to maximize the benefit. And that's why you want to set things up right from the very beginning instead of wait until the last minute. Have these conversations with accountant at the beginning before you set up the business to make sure that you are aware of all your obligation, as well as register as early as possible. Number 4, set up dedicated bank accounts and credit cards. Well, as a minimum, without doing anything, you should have one bank account dedicated, set up so that all your business income and all your business expenses would go through that bank account. As a minimum, if you rely primarily on credit card to pay bills, because a lot of pre-authorized debit right now would go through your credit card, you should also set up a dedicated credit card for your business, and all the business expenses would go through that credit card. If you have registered a business name, you can open your bank account using the business registration name instead of using your personal name. If you run your business through a corporation, you should always open your bank accounts directly inside your corporation. Please do not save on the little bit of bank fees, because it may harm you from a tax perspective down the road, messing everything up. Corporation is considered a separate legal entity, and you should definitely set up a separate bank account specifically related to your corporation. And when you set up a corporation bank account, the bank usually asks you to provide the articles of incorporation, which is a document that you get when you set up the corporation. And together, you also need to provide a business number issued by CRA. Now, the reason why you want to have a dedicated bank account and credit card is to allow you to separate all your personal income and expenses from the business ones. From a bookkeeping perspective as well, it allows you to track your finances a lot easier. You can just log into your bank account and really see if there is money in the bank. You can simply pass on your bank statements and credit card statements on a monthly basis to your bookkeeper, and they can get 80% to 90% of your books done using those 2 monthly statements. Now, obviously, there are other stuff that you want to add into your bookkeeping as well, but as a minimum, having that dedicated credit card account as well as dedicated bank account would be helpful for you to do your bookkeeping as well. So the 5th tip that I can share with you is to make sure you set up your financial management system. I mean, I'm an accountant, and I'm ashamed to tell you that I did not have the setup at the time when I started out. I didn't have a dedicated bank account set up to run through my income and expenses. I didn't have a cash management system at all. I didn't know how much HST I would have to send to CRA. Remember, when you first start out, generally speaking, you're only required to file HST once a year. So I have no filing obligation. I have no cadence whatsoever. By the time I finished the year, I've also spent all my money, had no ideas how much I have made throughout the year or not, or if I still have any money left behind in my bank account to pay for the taxes. Well, don't laugh. I've let that part of my business slide for at least 3 years before I sorted out a system to keep everything in the same place. I didn't keep up with my record keeping. I didn't have any KPI, the key performance indicator for myself. I didn't know where the sales were coming in from. I didn't know the kind of marketing strategies that produces the maximum result. I didn't save money aside for taxes or even reinvest into my business altogether. I just had no freaking clue, even though I went to school for it. Looking back, I should have kept my books up to date. Most people treat the record keeping as the unnecessary evil. Well, they are just required to report to CRA. That's how all my clients look at it. Well, the reality is that the financial information from compiling all the sales data, categorizing expenses that you incur, can provide tons of valuable insights into your business. It can help you to set goals, identify trends, improve your business, identify expenses to cut, and help you make more money. Now our bookkeeping is done on a regular basis, monthly basis. We review our actual financial data every 3 to 4 months, depending on the business and the cycle of the business we are in. We compare our budget to actual on a regular basis to monitor any trend that would require us to potentially adjust our marketing plan or hiring plan. Now, financial management is the key to your business success. So, automation. When I first started out, I used something called QuickBooks Desktop to record my invoices. That was the program of choice of many small business owners, we use QuickBooks Online to do our bookkeeping, and I use it purely to issue invoice to my clients at the time. And my clients would either send me money by email money transfer, those indirect transfer, or pay me with a check. I don't know if you actually remember back in the days, when you get a check, physical check from people, you have to take the check, go to the bank and deposit that check to clear and actually have the money show up in your bank account. Back in the days, there is also no pre-authorized payment. There's no indirect transfer auto deposit. So every time I receive an email money transfer, I would have to log into my email and then click the button, log into my bank, enter the password, and sometimes the password doesn't work. It creates a lot of chaos. And then I also have to go back to my QuickBooks Desktop account to mark the invoice as paid. And sometimes I don't remember marking it. And so there is a lot of manual steps along the way. And at the end of the year, for those invoices that I did not and I forgot to mark it as pay, I have to go back to look through all my receipts and pictures of receipts to make sure that, hey, like this person has actually paid me. And then I follow up with the people who did not pay me. Now, that really sucked, to be honest. It's such a manual process, and I have to track everything down manually, and I hate that. And to be honest, this is not a great way to manage my business or your business at all. So over time, I discovered the use of various apps and automation available. I signed up for an online accounting software, which also enables me to send out invoice and automate follow-up email if they don't pay me. Immediately, and every now and then they would start getting email, hey, you haven't paid Cherry yet. And it also allows me to collect money through credit card. So if it gives them the option to allow me to pay me using credit card, online credit card. And yes, there is a fee associated with paying the credit card merchant, but at the same time, I'm collecting money upfront. Now, in my business, I use a lot of apps. We have a tech stack of so many apps that I can't even tell you how many in total easily. But the choice is made just to make our lives as simple as possible, as fast as possible. I have an app to do proposal. I have an engagement letter sign-off app to kick off the engagement, to collect money as well from our client. And then I have QuickBooks Online for me to do reconciliation. I sync it together with my bank account. We're always out there looking for the latest and newest apps available to make our lives and our clients' lives easier. We also have an app called for our CRM app, Client Relationship Management app. We have an app for our marketing as well. We have another app that helps us with source deduction and payroll, and it also prepares the records of employment. We use another app to track vacation, another one to issue payments to our suppliers, and then there is even more beyond that. So you don't have to start from something so complicated. It can be as small as starting small, set up pre-authorized debit to pay for your utilities bills or rent. The more you can automate, the more free time you would have to allow you to focus on building your business. Number 7, keeping up with the cadence. Well, you might hate keeping up with all the remittance and filing obligation that we discussed earlier. I know operating a business has a lot to deal with, and you might hate the bookkeeping altogether. You might not like answering your accountants and bookkeepers questions. I get it, because I get angry comments all the time. But those are all part of owning a business. And you can also choose to flip a switch and use the opportunity to analyze your business financial health on a regular basis. There's that saying that goes, if you improve yourself by 1% every single day, only 1% every single day, you'll be 37 and 8 times better by the end of the year. So this means that if you make a small but consistent effort to improve yourself or your business every single day, the cumulative effect of those improvements will be significant over time. So this is why it's important to have that dedication and consistent review on your financial performance, as well as commitment to remit everything on time on a regular basis. It's not a one-year, one-time thing that you just happen at the end of the year when you meet with your accountant, external accountant, and you find out that's what you have to pay and you pay it. That's not how it works. In the real world, business actually use numbers to help them improve their business and grow. Wow, that was a long one. If you enjoy watching a video on small business, please consider leaving a comment below, giving us a thumbs up, and subscribe to our YouTube channel as well. By doing so, you will help signal to the algorithm that our content is valuable and informative, which may lead to more people discovering our channel and watching it. Thank you for your support. Until next time, thank you for watching.